Thank you for joining me. Appreciate it. So I'm going to kind of take it from the top. This is Karan Kapadia, joining me, Apurva Sangvi. I've been doing these calls for all of our friends and kind of our growing network of people that are interested in real estate investing. And the goal for me was just find great kind of real estate entrepreneurs in my network and allow them to kind of tell their story. And the goal is not only to kind of broadcast what you've been accomplishing over the past few years, but also just anybody that's kind of new as you once were and I once was trying to get into the real estate investing scene to just kind of learn, get some of the fundamentals down and just kind of get to know all the 101s to start with. Short-term rentals is what your expertise is. You run a very successful company called Guestspaces. And so short-term rentals is hot. Austin is hot. You've got kind of the perfect storm of real estate mecca where you're focused in. So if you don't mind, just let's start with your background, man. I mean, I know I probably don't even know some of the stuff you're about to share, but like, tell me your journey, just give me 2 minutes of the life story and then professional journey and then how you kind of got to Guestspaces.
Sure. So nice to meet whoever's on this call. Thanks for having me, Apurva. So yeah, just a little bit about my journey. So I moved back to Austin from Houston back in 2012. I took a job at a real estate private equity firm where I was managing a $600 million student housing portfolio. So that's kind of, my first kind of entry into real estate. From there in 2013, my wife and I bought our first duplex, centrally located. It needed a lot of work. It had college students staying on one side. So that was kind of our first remodel project. We renovated one side and let the other side rent. And basically we pretty much lived for free.
That's house hacking. So you house hacked your first.
Yeah. That was the idea. And then we started, I was like, you know what, we're coming to Houston a lot to visit family, friends. And we said, well, why not try to rent this place out on weekends when we're going out of town? So I started doing that, and I was making, double of what I was making on the other side. I was getting, I think, 2,200 for the other side, and here we're doing like $5,000 a month on just weekends, and we're still living there during the week. I was like, man, this makes a lot of sense. So we ended up moving out of that unit because it was just, to just be gone every single weekend was difficult. So we ended up getting a little 1-bedroom apartment across the street where we thought, okay, we'll stay there on weekends and then rent this place out. But we ended up just living there for 2 years and then converting both sides to short-term rentals. So that was the first one in 2012 or 13. And then from there, it was, I had enough money to kind of say, you know what, I'm not going to work. I quit my job a year later and I was like, this is kind of working. So why not just try to expand this? And so I left with one house. I had one house. We were kind of using it to pay our rent. We were using it to live. And it wasn't a whole lot after, all the expenses, but enough to get by. From there, it started kind of expanding. We bought another one the next year, and following year we bought another one. And obviously at that point, I couldn't even get loans, right? Because I had like almost no income. So I partnered with a friend who had substantial W-2 income, investment banker in Houston, and we bought both these houses together. He was on the loan, I managed it, made a management fee. From there, I wasn't really looking to start a management company, but really it just morphed into one. We had one of our neighbors ask us if we could do the same with their house because they saw this, the success rate and people coming in and out every weekend. And then friends and family, and always asked about it too. So we kind of grew into like 3 or 4 properties, but then really started Guestspaces about 6 years ago, where we kind of built a website and started marketing and hired a marketing person. So that's kind of where it really started growing from there. And I've still been focused on acquiring more properties as STRs, and just now we've been doing development and building properties, hefty remodels. So that's kind of what I spend most of my time on now.
So I'm going to unpack a lot of what you just talked through. I mean, incredible journey already, but I want to really break some of it down. So you house hacked the first house. How did you finance the first house? Just a regular mortgage?
Oh, that's another story. We couldn't get financing on it. So,
Okay. So what happened?
so, well, I couldn't get approved. I didn't have enough income to get
You don't have a
approved.
job. Yeah.
I had a job at the time before we bought the house.
Okay.
I just didn't have enough income to afford a,
Stable. Got it.
and it was 525,000. And we went 10,000 over asking even back then in
2013. Wow.
2013 to secure it. We got it. But yeah, we had Varsha's parents, my in-laws, co-signed us on that house.
Okay.
That was the only way we could get it, and thank God
Whatever it took to get it.
that didn't happen. I'd still be working at Virgin.
And that was one of the first, starting points, right? That kind of spiraled into the whole journey. Okay, so you basically got a traditional loan on it to get it to acquire it, right?
Yeah, 30-year, yeah.
30-year conventional loan. Okay, got it. And then so you house hacked and then kind of outgrew that one. What the next acquisition, you said you did it with a partner, right? Was that the same arrangement where they helped co-sign on the note to kind of help acquire it?
Yeah, so for the ones with the partner, there was no co-sign. He's 100% on the mortgage.
100%. Okay, so that was your arrangement. Like he'd be the guarantor,
Right.
and then you'd manage it.
I'm not charging acquisition fees or any other fees. Where you own it 50-50, we put in equity 50-50, you bring the note. I'll handle the remodel. I'll handle, getting it ready and, manage it from there on.
Understood.
So,
And it was just a 50-50 equity deal. And then do you guys still own those together now?
we do, yeah. Yeah.
Nice.
One of them we're getting, hopefully in the next year or so. It's an older house, really good location. So we're getting ready to probably tear it down and rebuild. Just build something much bigger. It's a big lot, so right off South Lamar.
So has your land gone up that substantially where you can just justify tearing the structure down at this point?
Oh yeah, the land. I think lots in that area go for over $1 million. So
wow,
we bought this house for 490 or something like that.
Wow, that's crazy. Austin is something special.
Mm-hmm.
So okay, so as you were kind of starting to amass, at some point you graduated away from the partnership, and now you're just doing it on your own. Can you walk me through kind of that?
Yeah. Now that I can get loans on my own, I do several on my own, but I still do. I have partnered with him again recently. He's probably my only partner.
Okay.
On stuff. I don't have any others, but he's just easy to work with, and
I mean, dude, taking it to 22 million, or your current owned portfolio is up to 22 million in kind of book value of the assets, right? I mean, in really what, a 9-year span, 8-year span, it's incredible. And to do it without taking on outside capital or significant outside capital is incredible. So like walk me through how you like the basics, like one by one. Are you just taking all the cash flow as you were kind of earning income on the Airbnbs? Naturally, clearly it was a hot market, so it just got better and better, and you just rolling out into the next deal and just keep doing that?
Absolutely, yeah. I think it's I had a lot of luck on my side in terms of timing, right? Like no one ever predicted Austin would move in this way. So it's been definitely a lot of luck as well that have created these enormous valuations in all these properties. Which has also made it very difficult to purchase anymore, and especially with the California bidding wars and stuff. I mean, we haven't been able to buy anything in the last year or so. Every offer is kind of, it went 400K over asking, which to me doesn't make any sense. So, but yeah, back to your question. Yeah, I think it was just using cash flow from Guestspaces, from these properties, and just kind of just pushing it back in. So I still kind of live like I'm living in that 1-bedroom apartment.
I mean, that's one thing that I think a lot of people underestimate in terms of like just how much capital intensive real estate investing in general is, right? And like you constantly have to, either live significantly below your means until you get to a certain threshold, or you're just, just stacking cash or raising capital, right? Like literally that's what other, like, I think, I shared a little bit of my journey. I mean, I had to raise capital through joint ventures because I just literally just don't have that kind of money at, a certain point. Right. And so, but if you find a good deal, capital flows and in
Right.
the market you're playing with, it's certainly, if you can find a good deal these days, right?
Exactly.
So right now, walk me through kind of your criteria into, in the past, call it 3 years of kind of acquisitions. You've leveled up, right? You probably started a little bit more kind of, mid-tier houses, but now you're at a whole nother level. What's that?
Low tier.
Low tier. Okay, fine.
Okay.
Compared to Houston, they're still mid tier and high tier, but nonetheless, right? So, what's your investment criteria? Like, what are you looking for these days for a successful Airbnb? How do you vet it? What is your analysis process?
So in terms of the property itself, I try to look at luxury, higher end, minimum 4 bedrooms, typically 5 and up, that are, have pools or have the ability to install a pool. So I've learned that at least in this market, in this Austin submarket or surrounding areas, pools sell like crazy. If you have a pool, you can literally, almost double your rent. So just stuff, just amenities, right? Like if you're trying to rent to families, if you have a property in downtown, so that if it's well located, central Austin, you don't necessarily need to have a pool. If it's going to be like 20 minutes away, there's no reason for anyone to be there, unless the property itself has amenities, make it feel like a mini resort. So the one we're building one in Kingsland right now, or remodeling one. We're looking at putting in a pool, a volleyball court, a pickleball court, like just make it
Wow.
stacked with amenities, right? Like that's what families want when they come out there. So making yourself stand out from the rest of the competition is what I really look for. Like, why is this so much better than the competition that's already out there?
And along the way, if I remember correctly, you started hiring, or maybe the whole time, like an interior designer, to do some of the design work, or walk me through that.
Yeah, so that's one thing I learned along the way. So the first house that we bought, and I I decorated myself with furniture from
Uh-oh.
a Houston apartment. Yeah. So, and then as competition kind of increased, right? There was back in 2013, you didn't have a whole lot of competition. There weren't that many Airbnbs. But as it started growing in the market, I started realizing that, I'm not booking every weekend anymore. So we hired someone to kind of refurnish the whole thing, and boom, we're back up. So that's something I learned along the way, like how important furnishings are. And even now when we, take on clients and they're like, yeah, we want to just use the furniture that we have, like, let's just get it up and we'll, once we start making money, we'll put it back in. It doesn't work like that. In order to make money, you got to put up that upfront capital, get the furnishings, get it done right the first time. So if they're not willing to do it, we're not willing to take them on. It needs to meet certain criteria. So yeah, you just got to spend the money up front. And a lot of people don't understand that, right? It's like, I'll do it after I make money.
So outside of, so now you've got an interior designer that drives your design decision making. What other kind of factors are you like looking at it? I've seen some of the, and I'm going to share your site in a little bit so that people can see it, but like, visuals, are you doing high-end photography, video?
Yeah.
What other amenities are you kind of doing to stand out these days? You mentioned the kind of like on property stuff, right? Like the volleyball court and things like that, but what else are you doing?
Yeah, I mean, we do full blown photography. Like we do videos. Some houses, depending on where they are, if they're located on water, we'll do aerial. We do twilight shoots. So our photography package is in excess of $1,000 for each.
Wow.
Well, it's twilight. And then we do 3D videos. Matterport, you've heard of Matterport,
Yeah.
but it's a company that does 3D home tours. So we've been using them for a few years. And then yeah, aerial was the other one that some properties get. So all of that, I mean, at the end of the day, I'm in the business of selling photographs, right?
It's a good
You're
way to put it.
and you're a cleaning and maintenance company. That's all we are. Everything else is kind of automated in between. So if you get your photographs, you can't get those wrong. And then as long as you get your cleaning and maintenance right, you're great. So that's where we focus most of our time, on cleaning and maintenance.
Very good. So walk me through that. Like, what are you, you've grown Guestspaces. Like, let's talk about that for a second. What does that team look like? And like, what hats does everybody wear?
So Versha now works with me as well. So I help out with operations when needed, but my most of my time is spent on all the new construction projects and just coordinating, right? It's more of just getting people to do their jobs. Uh,
Yep.
but I do help out with operations on a daily basis as well. And then we have Kayla, who's our marketing, business development and marketing. She handles all new client stuff, getting listings up, all the, back end website stuff. And we've got Gracie, who's our property inspector, who goes and checks properties, makes sure the cleaners have done a satisfactory job, and just make
Is that every turnover?
every turnover. Yeah.
Oh, wow. Okay.
I mean, if like this weekend we're 100% booked, so she couldn't hit every single property, but she's checking as many as she could, because pretty much all of our check-ins are today, right? So when you have like 40 check-ins on one day, it's impossible. Um,
Wow.
we've got
So
Daniel,
you got a property inspector, you've got a marketing coordinator type person, and then what else?
and then we've got a maintenance guy. Actually, he just joined us full time. He was part time with us. He just joined us full time on Tuesday this week. So yeah, we don't have full time work of worth of maintenance. We don't have 40 hours worth, but we just needed someone full time so that when something happens, you can address it immediately and not wait for him to do whatever else he's doing. So kind of have to suck that up.
So that brings up a good question. Like on a weekly basis, you're at what, 43 properties Guestspaces is managing now. That includes obviously your portfolio. I mean, is it just like normal wear and tear, or are there like major issues this guy can address on a regular basis, or what is it?
I wouldn't say anything major. It's so just normal wear and tear, like leg of a bed broke or leg of a couch, or people are rough with toilet paper holders.
The furnishings break too. That's a good point.
And that's another thing we've learned: do not buy, for at least for beds and sofas, do not buy from Wayfair. They will break. So for those, do
There
like
goes our Wayfair sponsorship. Thank you for that. No, I'm just kidding. No, I'm kidding. Go ahead.
for those, like at least beds and sofas that get people sit on, and if you put 200, 300-pound people on them, you don't know who you're renting to.
I'm not going to take any offense to that statement. No, I'm just kidding. No, no, that makes sense. I mean, you need high, quality kind of fixed furniture that's, going to get beat up a lot and can handle it, right?
Right.
I mean, the days of IKEA quality furniture probably wouldn't work in a
Yeah.
setting like that.
Right. And you can do that for like a nightstand or a lamp or something like that, right? Where it's not getting as much abuse. So anyways, yes, he fixes furniture. We get toilet paper holders always coming out of sheetrock. He's having to patch and fix those. And now we try to put them into studs so they don't come out. We're also going to get him to do, so we have all our pools are outsourced to a pool cleaning company. We're going to try to bring that in-house, because that'll just give him more things to do, keep him occupied. And then even pest control, going to get that done quarterly in-house, because we spend, I think, almost $3,000 a quarter on pest control. So
Good.
we can
And
do.
so I mean, you led right into kind of what I was going to ask you next. So like you've got in-house staff for certain level of work. What else what is outsourced for you guys?
So cleaners, we have our in-house cleaners as well as outsourced. So our in-house do most of the properties, but then we have certain properties that are, 45 minutes away, Spicewood, Dripping Springs, that we have, cleaning, designated cleaning. They don't work for us, but they're like 1099. And then we're in the process of hiring an operations manager. We used to have an operations manager pre-COVID, and we've never filled that role again. But it's become, obviously, as you know, hiring people is just so hard right now. So even though we bumped the salary by 50% of what we used to pay, it's just we haven't found the right candidate yet. But we're interviewing.
Wow. And so when do you kind of make the decision? Is it like the dollar spent? Is it like the amount of kind of workload to shift from outsourced to like basically dedicated staff?
For what role? I guess that would depend on.
Well, so like, I mean, the cleaning sounds like it may be probably a natural next piece. You mentioned the pest, right? And so is it a dollar value? Is it a load on kind of, resources for you guys? What do you think is kind of goes into your decision making?
It's so for cleaning, for example, we got to a point a while ago where it didn't make sense to hire outsourced companies, and we tried that. And the problem with that was the company was sending different people to the same house every week, And you got to know each house like the back of your hand, you know, like where the furniture goes, like people move stuff around, where the towels should go. And if every time there's a different person, it just didn't work. So we switched over to, you know, getting our own crew. We've got a crew of 5 ladies, and they'll go and they'll knock out a house within an hour, you know, and all our laundry. So we outsourced laundry. We were doing all the laundry in-house. And that was a huge pain point because you don't have a commercial washer or dryer, and you're washing sheets for, you know, 16 beds or 16 people, 8 beds, 9 beds, 16 towels. I mean, that's like a whole day process, right?
Right.
We've outsourced laundry now. So we have a central warehouse where the laundry company picks up and delivers 3 times a week, and they just pick up. And this way also the sheets come back folded, ironed, you know, like hotel, it feels like a hotel instead of just wrinkled sheets out of a dryer.
That's awesome.
Yeah.
I
So
was, I was gonna say, I mean, you're literally, at 43 doors times however many, probably 100 plus beds, right? You're operating a hotel,
yeah,
right? But it's just distributed
yeah,
across multiple locations.
exactly. Yeah. Except we don't have the hotel facilities where they have in-house washer, you know, the big,
Yeah, centralized. Correct.
so it's got to go from, so it's a lot of coordination, and it's not always fun, but it has to be done, you know?
So, I mean, that actually is a great segue. So tell me the worst deal, tell me the best deal, right? We all learn lessons, especially in real estate, right? I took a few punches that I talked about on the last call, that I did, but like, tell me about some of yours. Let's talk about real estate specific, and then like maybe operationally as a second, right? I'm sure there's been horror stories of tenants, right, or guests.
Yeah. Worst deal as in guest
Like a
space?
real estate deal.
Okay.
No, real estate transaction.
So worst deal was obviously the Dallas deal where we got, you know, significantly defrauded and, you know,
So,
lost.
so for those that don't know tell me about the deal.
So that was a non short-term rental property. It was a medical office building where the sellers, 2 doctors and business guy who's their partner, they sold us a building that was apparently 100% occupied. There were false leases, false notarized documents, just a whole bunch of fraud. And they were 3 of the tenants as well, and they immediately defaulted on their leases after selling us the building at a propped up valuation. And it was at a time where it was just difficult to get it leased up, even at half the rates that we had originally, they had originally contracted for. There was just so much inventory or supply came on the market during that time. And I think now it's probably, as Dallas has grown, I'm sure that's changed. But this was 2019 is when we got rid of it. But that was the worst deal. Lost a lot of money at that point. Investors lost a lot. I lost a lot. Had to end up writing a check to the bank to take the property back. So that was the worst deal.
And so can we unpack that for a second? Tell me, like, what do you think led to kind of even seeking the deal in the first place? I have some kind of gut things that you just mentioned. It wasn't in your core geography. It really wasn't an asset class that you were already familiar with. So you kind of strayed away.
I was sort of familiar with it because we did do medical office at Vertis as well.
Okay.
I also hired there was a guy who I worked with who I hired and he used to run the medical office for Vertis. So he had a lot of experience, and I had some because I worked in that asset class as well for a little bit. And I really liked the asset class, and it's still a great asset class. We just had the bad luck of being.
Yeah, I'm a partner in one. I hope it's a good asset class. Yeah.
Great. And usually you'd think doctors are good, great paying tenants. They're successful, they make money, they pay their rent on time. But these guys went to an extent of just, they just signed these leases and wouldn't pay.
Yeah, fraud. I mean, it's just
it was pre-planned, right? Like for all 3 of them to do that at the same time, it was pre-planned that they're gonna, and then over the years, during the course of the whole legal storm, we learned that this is not their first rodeo. They've done this to several other people, including private equity firms, larger private equity firms. And, when I contacted them, they said, it's not worth a headache for us to even go through a lawsuit. This is like 0.1% of our, 3 million square foot portfolio. For me, it was like everything.
right.
Just didn't want to, they've been through this before, and probably learned that it's not worth chasing because only the lawyers get rich.
Yeah.
these
So
lawsuits.
what do you think your takeaways, what lessons did you learn from that experience?
Um, you know, not raise people's money. That was the most stressful time of my life because of other people's. I was dealing with other people's capital, and that's why
Yeah,
I don't want to do that again. It's not for me. It's not worth it because of what I went through. Sometimes you have to do that to get started for a first timer. If
right.
you have it, but for me at this point, I'd rather be comfortable and without the stress than have all that stress and try to you know become wealthier.
Makes
So
sense.
that's one thing I will never do personally again.
I mean, it's a degree earned degree of some point. So
Yeah,
at minimal, you learn some valuable lessons, right?
for sure.
Um, so let's flip it around. What's your best deal, real estate wise?
Best deal. I mean, we've got a couple of really good ones here. The first one is obviously the best one because I just bought it at such a low cost. So that still
Yeah,
throws off a 80% cash yield every year. I can't replicate that because
yeah.
valuations are,
Market's changed. Yeah.
but that's probably the best cash yielding deal. The next one is probably the historic house, which I don't know if you've looked at on our website. That was a really cool deal.
I'm gonna share your site while you're talking, so people can just
Yeah,
kind
yeah, we actually got in a magazine on that house. So that was like a 3-year construction project. And if you scroll to, if you go to book now, I can show you all that house.
of. Yeah. Let me do that real quick.
Book now, there you
Yep.
go. And then just scroll, we can scroll down till we find it. It's called the historic. Might need to go to page 2.
These are these are all your clients' listings at Guestspaces as well as your own properties, right?
That's correct. Yeah.
Got it.
There you go.
Which one
Yeah.
was it?
Yeah.
This one?
That one, really cool project. It kind of so it was a when I bought it, it was a 2-bedroom, 4-bathroom, 2,400 square foot house. It's in the National Register of Historic Places. It was just a really chopped up layout, just really weird. I wish I had some photos to share with y'all of what it looked like before.
Before us.
But basically, we raised, so the house sat in the floodplain it's because it backs to Shoal Creek. So we literally raised the entire house up 8 feet out of the ground.
Oh my
Uh,
God.
and then, while we
How
were
much
doing
does that
that,
cost? I got it. Like, what is the price tag on that?
it varies. And so I'm actually adding a pool in here right now.
Well, raising the house, how much did that cost?
Well, raising the house was about 100 grand back in
Oh,
2018. I'm sure it's like 200 today.
yeah, yeah, absolutely.
But it basically it was 90 grand to go up 8 feet. And then he was like, well, I was like, what if we just go up an extra 2 feet, go up to 10 feet, and I can have a 9-foot basement, which I can make usable. So then
Yeah,
it
makes
wouldn't cost
sense.
a whole lot more if we're already doing it. So it was an extra 10 grand. So it's like, well, let's do it. And now we have a third level downstairs, which has 2 big bedrooms and a game room.
So
Uh,
wait, in Texas, does basement square footage, like, is that taxable?
well, it's actually called, it's considered conditioned storage. I couldn't call it living space
Okay.
because you can't build in a flood zone. But it's not a basement. It's considered basement if it's more than 50% underground. But this is not more than 50%. So it's not really a basement.
Got it.
Only one side of it's about 20% underground, and then the
I
rest
think
of
I'm
it's.
about to get to the picture of it. It looks like it. So is it kind of just like extra amenity space, but not really used like as a bedroom?
No, I still use it as a bedroom.
Okay.
But for zoning
This is
purposes, yeah, this is it. So it's all concrete. It's brick wall.
That's
Even if it
beautiful.
ever floods, we'll just power wash it and be done. Like if you look at all the plugs and switches, they're like above the flood zone.
Oh, very smart. Yeah. Is that
Nothing
probably a code thing?
damaged really. Uh,
Very cool.
yeah, then there's 2 bedrooms down here as well. I don't know if you saw those, but so yeah, this house now sleeps 16 people, which is, it's walking distance to Whole Foods in downtown. So
So do you remember the numbers on this one? Like what did you pay to buy it? You've rehabbed it extensively, obviously. It looks beautiful, by the way. Walk me through it as best you can what the numbers were.
so yeah, it's I bought it for 775, I believe, and then I put about $1 million into it.
Oh
And
my God, more than what you paid for it.
Oh yeah, I mean, just to completely renovate it, all new electricals, lift the thing, and that's including the pool and stuff that's still going on. So that's it's not completed yet, but that's inclusive of all of that. And the best part about this is because it's a historic property in the National Register of Historic Places, you can get, and that's something I learned after I actually bought it, which I wasn't planning on. But you can get historic tax credits.
Tax credits, yeah.
So on a bulk of the project, I got state and federal tax credits, um,
Wow.
about 400,000 worth of tax credits. So, it was an insane deal,
So you got tax credit value. What do you think the property's worth today?
The property's probably worth 3.5 today.
Wow.
Um, Once the ADU is done, there's a 2-car garage now. There was a 3-car garage, but now it's 2-car garage, and there's another 1-bedroom, 1-bath, which is not pictured here because it's not completed, but it's a separate structure behind at the back of the house. And there's a pool, and so once landscaping is done, probably 3.5 or so. Um,
Wow.
it'll
And
be
so
four.
you put in what, pencil napkin math was what, 2 million bucks into it, plus or minus,
Yeah, probably a little less.
a little
Um,
less than 2 million, and it's worth 3.5. I mean,
yeah.
almost coming up on doubling your money. That's crazy. Not to mention the cash flow along the way.
Right, but that's also, again, I think it would have increased my value if the market hadn't changed, but it's also because the market has changed, shifted in a way that
Right.
nothing predicted, right? So again, that's back to luck, right?
Yeah. For the tax credits, just quick segue on that. Did you hire a consultant to help you navigate all that
Oh
stuff?
yeah, yeah. There's no way to do it on your own. There's so many nitty gritties with these tax credits. What you can do, what you can't do. So yeah.
Did
Uh,
you have to match any exterior
oh,
aesthetics to the old?
the reason it costs so much is not because a renovation should cost that much, but we had to take off every window, every piece of siding, every baseboard trim. You can't replace. You have to refurbish and put it back. So if I'd done the same thing from scratch, it would have been, maybe 40% less.
Wow.
But the whole
But in the
reason,
long run, it's
a
going
lot
to
cheaper,
certainly be worth
right?
it. And just mechanically, your tax credit, if I'm not mistaken, they're like a 10-year, 15-year kind of thing.
Oh, what do you mean?
Like, is there a limit on how long you get the tax abatement or whatever it is for
No,
the
it's
store?
not a tax abatement. It's a credit. So you can use it to offset your federal credit, the 20%. You get to use it to offset any income you have. So you can, so
Oh,
if
wow.
if you made $1 million, for example, and you have this credit of 200,000, and your tax bracket is, whatever you're in the highest tax bracket, you're paying 500,000 in taxes. Now you only pay 300,000 because you got 200 in credit.
Got it.
It
Makes
just goes
sense.
towards your personal, your entities.
And is that every year though? I guess that's the question. Does
No,
it
no, no.
ever expire
It's just
or it's
once,
just
not every year. It's like
time? Okay, got it. Got it. Got it. So the one that we were applying for, and it's been a while, so hopefully I'm not mistaken, but basically it was like we got property tax credit for 10 years. So there was a value, like every year we would just get that wiped off. So it was maybe a different
yeah,
type
this
of
is
tax
not
credit.
on property taxes. This is separate, completely independent of property taxes. This is on your federal income tax.
Income. Got it. Got it. Very cool. Very cool.
Because it doesn't have state credits, you can actually go out and sell it to someone who's paying franchise tax. But so it can offset franchise tax, but we don't pay franchise tax, or very minimal, if
Right.
that. So I just sold it for, I think, 93 cents on the dollar.
Wow, that's awesome. So walk me through, how did you fund all this? I mean, did you get like a rehab loan? Like,
Yeah, no, I had a rehab loan on this thing, and then a lot of it went significantly over budget, because of, so a lot of things I also did because I wanted the tax credit, right? So refurbishing things and that I wasn't planning on doing. I was going to replace, baseboard trim. Um, so it kind of went over budget. So I did have to fund a lot of it out of pocket. But it was like a 2.5 year project.
wow.
So it was in smaller amounts. I was able to do that.
And so did you have to kind of educate the bank on like, hey, my, construction budget's expand, exponentially higher because of this designation that we're trying to do? Like how does
No,
that?
Well, I was locked in. My construction loan was X, right? And they didn't change that. That's why I had to fund it out of pocket for the
Got it.
balance of, so they weren't willing to change or increase the construction loan.
Got it. Got it. Got it. Got it. So, and so how do I'm going to transition into kind of new build. And that was one of my next questions for like, if I'm a newbie, which, I would, aspire to be a short-term rental, but I don't see myself wanting to run a hotel. Right. And, especially at scale, I could easily hire a great company like yours, Guestspaces, right, to kind of run it. But right now the market is challenging, so you've chosen to build, right? And so, or at least the most recent. What do you think the advantages of building versus, is it just the market factor and that's why, versus buying something existing in rehab? Kind of where's your head at with all this
I
stuff?
don't think there's necessarily an advantage to either one. I think it's just depends on the deal itself. Like if you find a good opportunity, a rehab opportunity, I jump on it. I just these new constructions that I have going on, I just found they were good. I found good opportunities on land, so it just kind of happened. But I think both can be very lucrative. But I think if you do it right, you add immediate value than buying something, than buying a $2 million house over here. If you built it or remodeled it to the specs that work for short-term rentals.
Yep.
I think you can add some immediate equity into the deal. So that's kind of why I also do that instead of just buying. I have bought a couple that are just turnkey ready and just furnish it and go. And those are so easy, but you don't add that immediate value in terms of equity day one.
So when you're sourcing like existing properties, how are you vetting HOAs that may be, not accommodating short-term rentals or outright just don't allow it? Is it just that simple?
I just try to stay away from HOAs in general because even though they may allow it today, what's to say they change it 2 years from now, right? Or 6 months from now. So I usually just try to stay out of HOAs. Just own no condos, no, even single family homes can be in HOAs. But all the ones we have are, just City of Austin, no non-HOA.
And so when you're acquiring, are you using like brokers, realtors in the market? Are you sourcing anything off market? You said you came across some land deals that were kind of interesting. How does your sourcing strategies?
My wife, she's a realtor as
Fantastic
well.
realtor.
So yeah, she's found pretty much pretty much all the ones we have, except the ones in Kingsland, Texas, which is about an hour on Lake LBJ. So I have a different broker or real estate agent for that market who just knows that market really well.
And so if I was going to enter Austin market, you've got a great agent as a partner, your wife, that we can kind of hire and have, she clearly knows the mechanics at this point of kind of good short-term rental opportunities. Then you've got Guestspaces in terms of like a full suite of services for operational. I mean, that certainly minimizes, the stress of somebody, especially new, wanting to get into the market. Was that kind of always the goal to kind of get this full suite of services?
That wasn't. It just kind of, again, just sort of morphed into it. And yeah, we get calls from investors from time to time. Hey, can you find me a property and manage it and build it out, do everything for me, right? Like I'm just going to write the check and y'all do everything. Yeah, we'll do it. We've sold, or Varsha's helped find some of our clients today, help them find the house. Then we've linked them up with our designers, get it furnished, and they just write the checks and then we manage it and boom, we're done. And for them, it's turnkey. Don't have to worry about kind of anything.
Yeah, no, I mean, it's huge. She was our agent on selling our Shoal Creek property, which I completely regret ever doing ever in life. But
Well, you don't sell.
lessons learned. My new theme in life, which I mentioned on the other call, is I'm only buying things to never sell. Like the intention is never to sell anymore, right?
Long-term, buy and hold investor, and just build a portfolio. And I have no reason to ever sell. You can refi, cash out, do whatever, but don't sell if you can afford to hold it. If it's in a well-located, asset in Austin. I mean, that's today with the way today's market is. Who knows what it looks like 5 years.
Markets ebb and flow, of course, right? But if you have a good entry point, right, which you have on many of your properties at this point, right, And if you can, even with a downturn, let's call it a 30% downturn on top line, rental income, still sustain,
Yep.
right? Then there's no reason to sell unless you're in distress, right? Especially
Exactly.
if you keep your LTVs low, right? So
I keep my LTVs as low as possible. And, I don't typically like going above 70, 75. Um, I know people do 90, and I just don't like being over levered, especially after, one bad experience in the past. I just want to
yeah.
be not greedy and be comfortable. And
Yeah, I mean that's a lesson I'm still trying to teach myself is under lever because I definitely have a little bit too much for comfort, but we'll see. Hopefully, we add enough value to where we can overcome that. So what? Give me the elevator pitch on guest spaces. I'm a new entrant, and I'm looking for a company like yours to help take over. What do you guys offer?
so we're obviously full service management. Our goal to our homeowners is they do absolutely nothing other than collect their monthly distribution and statement. Um, I think of ourselves more of a cleaning and maintenance company because again, you get those two things right, everything else flows perfectly, right? For the most part, everything else is automated. So again, we're local in Austin. We've gotten calls for Houston and Dallas. We won't do anything out there. We just don't have enough scale, and I just don't think those markets are great for STRs. So we're just kind of focused on our own backyard now, and that's it. We're not all over the place and spread too thin.
That's my very next. So, what is the goal for guest spaces? Like, where do you want to take it?
So I think I'd really like to grow it to about 100 properties at least, and then consider an exit. We have been contacted recently by Vacasa to acquire us.
Oh, that's
I
amazing.
just don't think I'm quite ready for it, and I don't know what I would do.
Buy more property.
Yeah, but I think I'd want to grow it a little bit more
Yeah.
before an exit. So, and if not, having 100 properties is really, I think cash flow would be really amazing. And just have a sizable team to really just run it, and um, you know
Can you walk me through a tech stack that you
yeah.
you op you operate with? Like, what technology you guys use?
So we use a property management software, which is our biggest piece. It's called Direct Software. Um, it's kind of a startup. Last couple of years, great guys. I mean, we have our problems with it because growing pains with bugs and whatnot, but they're great software, and that helps us push out to Airbnb, VRBO, and everything. That rates are all done through our software. So it's not like mixing calendars. We have a partnership with Marriott Homes and Villas too, so we get to push out to them as well. So that's kind of our biggest piece. Then we use another company called Price Labs, really cool company.
Hmm.
They do dynamic pricing. So the guy who started it, he actually, Indian guy from, I think from Rajasthan, he used to work in United Airlines pricing division, and then he started this company, and it just helps you automate pricing and looks at, for each property, you can set up a core portfolio, set up a radius, and kind of look at supply, demand, and it tracks everything that's going on Airbnb. So, what's the availability, what's the demand for that weekend, like how many clicks people are, and it kind of just helps you generate pricing tools for that. So we use that for pricing. We are using noise monitoring devices outside. You can't hear what they're saying, but it gives you a warning if there's
Oh, wow. What? So like that's on property.
yeah, that's on property. It's again, each owner doesn't opt for it, but whoever wants it, if they're in a sensitive neighborhood or
So basically, if somebody's throwing a loud party, you know about it.
it'll text us. It'll send us in the app. It'll send us a message saying, "Hey, the decibel level is beyond," and you can look at thresholds and whatnot. So after, it'll tell you these levels, all day. But then after 10 p.m., your thresholds go down. So if it's
Hmm.
above that, and if it's outside, then yeah, it'll alert us, and then we'll contact them and say, "Hey, move inside," or
Tone it down or whatever. Wow, I've never even heard of that. That's super cool.
that's pretty cool. And then we use obviously Nest thermostats and whatnot in every property. Um,
And
and
then
then
in your analysis, do you use like I hear a lot of people talk about AirDNA and some
the
of the
price
some of
tabs is it does what AirDNA does. AirDNA doesn't automatically price it. Price Labs looks at all that data and then prices it as well for you. So sets your pricing for you. I mean, of course, you can adjust it and you have to constantly tweak it and manage it and whatnot. But Price Labs is a level above AirDNA.
got it, got it. And then
Um,
is there any like CRM or is that all kind of baked into your
Yeah, so we use a company called Vintori for lead generation, and they
Okay.
have I think it's HubSpot. I don't our marketing person handles that, so I think it's HubSpot that they use, but
Yeah.
that's what they use for all our leads and new client leads and stuff. But that they provide with their fee, they provide their CRM.
So
Um,
how much of your guest traffic is still derived from like Airbnb, VRBO as portals versus like direct?
Direct is about 10%.
Okay.
Airbnb is about 50, and then VRBO is about 40.
And so
30.
did you have to kind of work on establishing a web presence to get direct?
Yeah, we're not really trying to push direct bookings. We're trying to push new homeowner leads through Vintor. They help you get leads for new clients, not new guests.
Mm,
Like new management clients.
got it. Understood.
We're not
Got
trying
it.
to replace Airbnb or VRBO. I mean, there's no way to compete with their SEO and ad spend. And someone coming to Austin doesn't know Guestspaces, but they know Airbnb. So
Of
we're not trying
course.
to replace them.
And how effective has like your social media strategies been to driving customers or guests?
We haven't really done a whole lot until now. Like we've really just started. I mean, we've had a social media presence, and we have gotten some leads. Most of our leads have come through Google, I'd say. We've had a pretty high ranking position where we used to, and then we've had a problem with Google lately where they took us off and now they put us back on, but we have to gain traction again to get back up.
Hmm.
Um, but yeah, most of it is just from Google, and now we're doing AdWords and stuff through with Vintori, who we just retained. Literally, we're still in the onboarding phase,
Got
uh,
it.
in the last about 10 days ago.
Very cool. And so, you know, if I'm a new short-term rental investor, do you advise going straight to a management company out the gate, or do you think like self-managing, there's any value to it? Personally, I see it as a huge pain in the ass, so I would never do it. But like, if I'm just a new investor, what would you advise them to do?
It just depends on your ability to commit time. Like if you have a full-time job and you don't have the time for it, then don't do it, because this is a hotel. When someone says, I need, there's a leaking toilet, it needs to be fixed now, not tomorrow, right? You got to have, if you have trades lined up or a maintenance person, your own cleaning staff that you can rely on, then sure, do it. But it is a huge pain if you're not willing to take those calls at 10 o'clock at night, or, calls from an angry neighbor at midnight when the guest is being rowdy, or go deal with it, then don't do it, because you will screw it up. And then once you get, I'll tell you this, for every bad review you get, you need 10 good reviews to offset that one bad review.
Oh,
So
that's good.
you can't, it's not worth getting that bad review. So everything we do in this business is for reviews, because that's what people base it on, reviews and photographs. So, if someone's like, hey, I want a refund, if I'll give you a good review if you give me a refund, not the entire stay, but a partial refund, sure, take it, man. It's,
Worth it, yeah. To
it's,
keep the your credibility high, right? I mean, it's just like searching for restaurants, right? You
yeah.
start with the top 5 stars and da 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 da, and that's just how people search these days. That's very true. Very true. So, back to your kind of real estate portfolio, I mean, 22 million, it's freaking amazing, and so proud of you as a friend to see you accomplish that. But like, what's next? Do you have a goal in mind? Where you headed?
Oh, well, like I said, the goal is 100 properties.
Oh, okay. So owned 100
No,
properties
no,
of your
no.
own.
Well, under management, I don't have a set goal for, ownership. It's just because it's so hard to find anything today. But as much as we can acquire, we'll acquire. But the goal is, to get 100 under management.
And is there any other markets that is catching your attention outside of Austin, given that, it's so hard to acquire right now?
Yeah, it's, that's why we went to Kingsland, Texas last year for the first time.
Okay.
And we just acquired 2 more in Kingsland. And again, those deals are not, my whole thesis over there is not cash yield, because I'll be happy if we can break even on
Hmm.
those in terms of mortgage payments, just because again, but I just believe that area is just going to blow in terms of capital
It's like
appreciation.
almost like a covered land play. You're just
Yeah.
acquiring and holding and hope
Well,
that you can just cover the cost.
yeah, just cover the cost, right? And just as long as you break even, and and it's funny out there. When I first started looking right before COVID, houses that were 600,000 are now selling for 1.5. You know,
Wow.
um, So,
What do you
yeah,
think is driving? I mean, I honestly don't know a ton about Kingsland. What are you seeing out there that's driving the growth?
I think liquidity. There's been so much liquidity, so people are buying second homes. That's more of a second home community because it's waterfront and there's not a whole lot out to do there. There's also with the growth, Austin expanding to Leander and whatnot. Leander's blowing up, and this is only 30 minutes away on waterfront. It's also constant level lake, unlike Lake Travis, which is why I went there instead of Lake Travis.
Mm,
Lake Travis, you could have a lake house today, and tomorrow it's just gone.
dry land, yeah.
So that was my draw to Kingsland. It's just a beautiful lake. It's a quiet. It kind of reminds me of how Lakeway used to be 20 years ago when we were in college and we used to go out to Lake Travis. It just reminds like a sleepy town. Everyone knew everyone. That's how Kingsland kind of reminds me of today. And I just feel like it's going in that direction where it's just expanding and blowing up. And I like waterfront because obviously there's only limited amount of waterfront. It's not
Yeah,
unlimited portions of land.
that's a
So
hard amenity to replicate for sure. You know,
so
and
that's
supply always gets more and more limited once, especially on a new waterfront kind of community. Once it's gone, right?
yeah.
Um, so what keeps you up at night right now? In terms of short-term rentals, the industry, the market. There's so much kind of economic uncertainty right now. Like what's specific to your business? What's keeping you up?
When is the next neighbor complaint going to come? Especially on Fridays and Saturdays, it's like, who's going to call today? uh,
So it's operational still. It's still
yeah,
kind of a heavy piece
it's
of it.
always the same few neighbors, who just hate the fact that there's an STR next to them, but just can't do anything about it because it's legal. Um,
But you're under their microscope, basically.
So it's like, who's going to call today? And that's just always stressful when you're out on a Friday or Saturday or you're sleeping and it's like, oh man, I got to deal with this now.
Mm. And then what about a more long-term view, like, just kind of higher level, anything that concerns you, right? There's
This super crazy valuations that are popping right now. I mean, I'm obviously concerned about it kind of, settling back down because this is ridiculous. When you have every house selling for 800-900 a square foot, it's got to burst at some point. It can't go on.
Yeah, it's
So
crazy for Texas.
worried about when that's going to happen and what that point's going to be.
No, makes sense. Makes sense.
Still don't
So
want to.
we're coming up on it. So I wanna just kind of round out on a couple things. What is the advice you'd give to a first-time short-term rental investor?
Really understand your market. Like, figure out where you want to be. Like, don't just buy a house and think, okay, I want a short term. It doesn't work like that. Like, understand supply demand, why someone wants to be there. That would be your starting point. Like, you can't just buy a house and I got to call, hey, I have a townhouse in Midtown Houston. I think it'd be, I need to make this amount of money. And I mean, just look at the comps. I mean, they're charging $200 a night, or you can't expect to make $500. It's not going to happen. It's the market is going to pay what the market is going to pay. And Houston has such a large abundance of hotels that, I mean, I think the Houston market has gotten better over the years. But if you look at just, go to Airbnb and look at rates, I mean, there's nice 3 bedrooms that are charging $92 a night or 150 a night. And here for something like that and well located is going to be like 800 a night, for the same thing. So really understand, what drives that submarket. And it's not just Houston in general or, market in general. You got to look into the specific submarket, like hone into like a 2 to 3 mile radius. Why do people want to be there? Like, is there a demand for tourism or something,
Some attraction point that's bringing people in.
um, so that would be your first starting point. And then, carefully run the numbers. Don't over leverage. If you can avoid it. That's,
And so like, in your strategy of, you're acquiring good properties, you're doing high value design, right? And investing in that. And then now you mentioned like, high quality furnishings, that's a substantial, investment on the front end, right? And so, you not only have to think about just the down payment plus closing costs on the home and then holding costs until you get the revenue stream coming in. You've
Yeah.
got all this kind of extra that's not a traditional rental property doesn't have, right?
And
Um,
short-term rental insurance costs a lot more than, it's a lot more risk. So it actually costs more than
so
traditional.
is there certain insurance companies that you go to for
Yeah,
that?
there's certain that specifically do short-term rental policies. So we use them like Proper Insurance and CBiz and
Hmm.
Steadily. But there's also commercial policies through some of the big Lloyd's
The
of
big
London.
providers. Got
Yeah,
it.
that some of these guys underwrite. So I have a broker for our personal policies, and he shops it around. But there's companies that specifically do short-term rental policies.
Got it. Got it. Got it. And then just kind of the last nugget. I mean, where would you advise somebody that wants to get into short terms to start resources to start looking at? Is there any like groups or books or anything that you would recommend to kind of the very first starting point for people?
I mean, I would talk to, try to figure out what your market is and then talk to local property managers there and try to get a feel from them because they have the best.
Short-term rental property managers.
Yeah.
Got it.
Like us, right? If you want to know about Austin, like I can tell you everything, the best places and what to do about Austin. I can't tell you anything about, New Orleans or anything like that, but you can find a local small guy who really knows, who's really in tune with the market, and that'd be I think your best resource. Of course, there's books and there's stuff out there. Probably haven't read any, but for me, my biggest knowledge base is attending conferences. Burma, which is Vacation Rental Managers Association,
Okay.
we're part of, is the is the biggest one. So they have, I think, 2 conferences a year. So we always attend that, and you just meet various trades, vendors, other PMs, and attend roundtables. VRBO hosts roundtables for property managers, experienced property managers. So we attend those and,
The
share
roundtables, are they like held locally or do you like
virtual.
virtual? Okay. Got it.
They'll do roundtables every quarter or so with 8 different PMs, and they have topics, just kind of like they'll kind of ask questions and everyone kind of answers and shares ideas and stuff. So that's kind of been helpful as well. I've done those.
Awesome.
Yeah.
Dude, this has been fantastic. I learned more about you in this past hour than I have in maybe many years. But I'm again super proud of you. This has been super cool. I can't wait to share this with kind of the whole community and just kind of learn about the business of short-term rentals. Keep us posted, man, as things grow and things like that. Excited to see. I hope to do a follow-up when there's a post Guestspaces exit and Karan has nothing else to do with his time now, right? So
3 years away from that, but let's see.
well, I appreciate it, man.
Yeah, thank you.
Super.
Thanks for having me.
Absolutely. All right. Thanks, dude.
Thank
Bye.
you. Well, I'm the host, so I got to end this, right?
Yeah, you got to end it. Bye.